Hello and welcome to Trading the Market Map. My name is Jody Samuels from the FX Trader's Edge, and today we're going to talk about trading the market map on the SPDR ETFs to find trends and corrections using my groundbreaking Wavy Tunnel Pro strategy to trade the market cycles. Let's begin. Please read this disclaimer. I'm going to read it with you. This presentation is for educational purposes only. Past performance does not equal future results. Please do not construe any information found here as advice or recommendation of any kind. And you can lose money trading. If you cannot afford to lose money, you should not trade. Today, we're going to start out talking about how to trade with confidence, trade and end of trend trades using a simple tool and trade plan. Actually using the Wavy Tunnel Pro setup. That's about trading the market map and understanding the cycles and getting ready for the next move for the trends and corrections. And we're going to focus on sector analysis on the SPDR ETFs using the market map. And then at the end, we're going to discuss the Elite Scanner Tool and Indicator Suite so that you can do this on your own, which is about mastering the setups all based on trading psychology and the market map. I wrote this book several years ago called The Trader's Pendulum. This is a book which talks about the three types of pendulums that traders face: the market pendulum, the emotional pendulum, and the financial pendulum. All relate to what we're covering today. The market pendulum is about reading the market map. The market moves in cycles. We have the trends and we have the corrections. The emotional pendulum is what we might experience while trading that market map. And the financial pendulum is about making money and losing money, because we need to learn how to accept our wins and our losses as well. This is the market map, and this depicts the emotional pendulum trading the market cycles. So when we start off at point 0 and we move up in 5 waves or in a trend move, which is captured by the channel lines, the dotted channel lines that you see, when we get to the end of the move, this is when the crowd, the market participants, can get a little bit optimistic and exuberant and greedy. They load up for FOMO, fear of missing out. And that's point T, the time that we should considering that maybe this is the end of the move and maybe we should be taking profits up here. And then the market starts to turn. We label this an A, and then a retracement B, and the final move down for C, where again market participants get fearful and panicked and discouraged and bail. Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. So we need to train our brain to be greedy up there at point T and be fearful at point C. And this is the market map that we are going to be focusing on today. Again, we need to take profits up at point T, and we want to be buying down at point C. So I want to show you something very interesting. This is the SPY, and this is a weekly chart. This is the market map, as you can see, and you see the purple arrow, that would be point T at the top, and then the gray arrow is when we should be buying. That's your ABC correction, the end of the move. And in between we have the wave, which are the purple lines moving up to capture the trend, and then we have the tunnel, which captures the corrections. So this is a weekly chart. Now, in October of 2022, this is when the gray arrow appeared. You can see in the little box over here, that's the purple box where the gray arrow appears. And at this point, many stocks showed up on our scanner to be buying the market, and that happened to have been the broad market low and the low for many stocks that were on our scanner, the S&P stocks we were tracking. Now I want to take you to the daily chart to show you that it appeared right over here in this section of the weekly chart. And this occurred a year later in October 2023. I showed you the weekly chart where it appeared. Same pattern, same setup. Gray arrow in this purple box. And the reason why the setup occurs on different time frames and on different markets is because the markets are fractal. And that means that the patterns repeat themselves over and over again, no matter what you're trading. You could be trading stocks, you could be trading Forex, you could be trading commodities, you could be trading cryptocurrencies. The same patterns repeat themselves. So when looking at the daily scanner in October of 2023, we noticed that there were many stocks that showed up again for buys. Again, a market cycle bottom, the bottom of a market before the liftoff. Let's talk about where we are today. So where we are today is what you might consider point T. So how are we going to find these setups? Well, the only way to find these setups is to go down to a smaller time frame. And so we did. And this is the hourly chart. Again, the purple box depicts the end of the correction on the hourly chart. You're not going to find this on the SPY, on the weekly or the daily chart, because we're in a different part of the market cycle. So I just wanted to explain that to you before we started to investigate on the SPDR ETFs. So what process do I follow to find trades and have the confidence to pull the trigger and manage my trades with clarity? The first step into my system is reading the market map. That's the analysis portion. You can call it doing a top-down approach. You can call it deciding where we are in the market cycle and then deciding how to trade the market cycle on the various markets that we're following. Then once we determine where we are in the market cycle, we use the top setups, the strategy, whatever strategy you have. I happen to use the Wavy Tunnel Pro tools. That's my strategy, but you might have your own strategy to enter and exit trade. So every trade needs an entry price, a stop loss, and an exit price. Finally, the third step in my system is to use trade management to manage the trade. But the first step before that is to use optimal risk reward depending on your account size to determine the size of your position, etc. And then you manage your trade. So my system includes a three-step process to find trades and manage the trade. Just as we looked at the market map for an uptrend, we have the same opposite market map for a downtrend. And you find this in many different markets where we might be in a downtrend versus an uptrend. And how we read this market map is through the Wavy Tunnel setup. It depicts the 5 waves. So we have the awesome oscillator underneath, and when we have a peak in the awesome oscillator, we can label this a wave 3, and then the awesome comes down to the 0 line, we call that a wave 4, and then the awesome oscillator moves up with divergence. We don't make a new high, and we label that a wave 5 because the momentum is running out of steam, and at this point with the awesome oscillator divergence, we're looking for a correction, which is our ABC, and then this is the point at which we're thinking about buying again. And we want to liquidate our positions up here. So now let's do some sector analysis using the market map. Some ETF and stock examples, understanding the setups. This is from a website called sectorspiders.com, and this is the sector tracker. There are 11 sectors of the S&P 500. The S&P 500 as of this date, mid-June, is up 12.1%. So we're almost through the first half of the year, and the S&P is up a little over 12%. The biggest performing sector is the communications sector, XLC, up 16.16%. The worst performing is real estate, XLRE, down 5.22%, and consumer discretionary is down marginally as well. Some of the other outperforming sectors include financials, up 10.32%, technology, up 12.01%, utilities, up 10.44%. These are year-to-date returns. So these change on a daily basis depending on what the market does during the day. We're going to go through a few of these sectors and take one stock from each of the from some of the sectors to show you how we follow the market map on the sectors and some stocks. The first one we're going to do is the best performing, the communication services. When we look at the stocks that comprise the communication services and we sort by index weight, so that means that we click on it and we want the highest index weight at the top, we see that Meta is the highest weight. So we are going to take a look at XLC followed by Meta. And you can also see the percent change during this is year to date. So a lot of these stocks have performed well, and we do have some negative performing stocks as well, obviously. So let's have a look at XLC, and we can see my cursor is on the start of the year, start of 2024. And once we broke through these market highs, I mean, the market, we haven't really looked back. We started to move up, and then the market was stretched at this point, meaning we had a red candle, our first red candle, and which was an engulfing candle. And so that gives us the first clue that, maybe we can correct down to the filter, maybe we can correct down to the wave, but we certainly don't want to be adding to our positions up here. We want to wait for the pullback, and we got it. And you can see that pullback on the daily chart right over here. We had a beautiful pullback right into the tunnel, and then we took off from there. So whenever you can find pullbacks in an uptrend, that's when you can get interested in buying. And now the market looks stretched again, and we had a red candle, and let's see where we go from here. Are we going to pull back some more, or are we going to make new highs? Okay, we'll have to wait and see on that. Now we're going to look at Meta, which is the biggest performing stock of, not the biggest performing, but the biggest weight in communication services. And let's just look at the start of 2024. At the start of 2024, we were right over here. The market moved up, and then on this day we had poor earnings, so the market sold off, Meta sold off. But look what it gave us. It gave us a great opportunity to go in. Like if we weren't in already, or if we wanted to add to our position, this was the great time. The earnings came out. They weren't so good. The market sold off, and good time to buy. Moving over to the daily, we can see the trend line break here, and once we broke down below the wave, the next stop is really the tunnel. And then once we move to the tunnel, this is sort of our buy zone, like to go in again. And now we just had another trend line break here on the daily. So now we have to see, we're starting, we have some strong candles, and we're in an uptrend. So let's see what happens with Meta. Now we're moving on to consumer discretionary, because this was a weak performing ETF. So I wanted to compare and contrast what we just looked at, communications services up 16.16%, with consumer discretionary down 0.64% year to date. And Amazon is the biggest holding of XLY. So let's look at XLY, and then we'll look at Amazon. XLY, in January 2024, this is where we were. Now, it's no wonder why we haven't performed with consumer discretionary. Why? Well, you can see that we've been trading sideways this whole time. This entire year, we've been trading sideways. We had a nice start to the year. We moved up, and then we had a nice three-wave pullback, which is an Elliott wave, three-wave correction right into the wave. Good level to get in at this point, and then we started to move up, and then we had another pullback. Will we take out these price highs and continue to move higher? Could be. The point is that you want to be buying on the dips. And this also shows the different pattern, this from communication services, which is clearly an uptrend, and this is a sideways market. And we can see that also on the daily chart. This is our breakout 4, by the way, so this was our signal to actually go in long on this, and it automatically spits out profit targets and the stop loss, and this was a long trade right here. But again, look at the sideways price action. We did hit all 3 profit targets, and then sideways, 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 sideways. Now let's look at Amazon. And Amazon at the beginning of the year was here. So Amazon has performed well. Now we're hitting some headwinds. We've been trading sideways for a while. So let's see what happens. We've got to really break through this consolidation for us to start to make gains again. But it is positive. Amazon is positive. Why don't we take a look at technology, which is the second best performing ETF year to date, up 12.01%. And Microsoft is the biggest holding in technology, followed by Apple. So we're going to take a look at XLK and Microsoft. We're going to look at the market map and see how this compares to the other 2 ETFs we were looking at. The start of the year is right over here. So yes, we can see how we've made some gains. And look at how when the market is stretched, we really want to see a pullback into the wave. And when we get that pullback into the wave, that's a really juicy area to go in again, assuming you're not in already. And we made a new price high. And now let's see what happens. If we take out this price high, then this will shift to the right. Moving to the right on the daily chart, yeah, we made a price high, and the market came down into the wave. Again, nice area to buy. On the left, when the market came down into the wave on the weekly, we came down to the tunnel on the daily. So this was the first buy zone, and this is the next buy zone if you're looking at the daily chart. The good news is we can scan for these setups, and we have our Elite Scanner tool on TradeStation, NinjaTrader, MotiveWave, and MT4, and we have the indicator suite on Wealth Charts. So the indicator suite is on all of these platforms plus Wealth Charts, and the scanner, we have a very sophisticated scanner on these 4 trading platforms. I'm just going to show you one example from our scanner. This scanner is on TradeStation. The top one is Chevron. That's one of the energy charts that we looked at. And the ready is 3 candles ago. The signal is 2 candles ago. I'm going to show you this chart. We also have our trend line breakout system. So we have trend line breaks. The royal yellow is 1, the noble red is 4 on Chevron, CVX. So let me show you what I'm talking about on the chart. It's very, very interesting. We have the weekly chart on the left where this triggered. So we have the green arrow, which shows this is our ABC correction down below the tunnel. This popped up on our scanner. This looks promising. And then the daily chart shows the trend line breaks moving above, and the wave is pointed up. So what I would like to see is I would like to see the wave to continue to be pointed up, but we can always go down to a smaller time frame, and looking at the 60-minute, we see that the wave has crossed above the tunnel. So I would say that pullbacks are buyable. If you're interested in trying out our indicator suite and our scanner tools, you can do so for a low first month price. The indicator suite and scanners are on MT4, TradeStation, MotiveWave, and NinjaTrader. You can select which one you want to try out. And the indicator suite is on Wealth Charts. You also get a lot of education with us. You will understand how the markets trade in cycles and use our proprietary combination of cycle high and low indicators with momentum indicators to warn of market tops and bottoms. works with stocks, futures, ETFs, Forex, and cryptocurrencies, works for day swing and position trading. Find precise entry points for option strategies. Embrace this suite of professional tools to trade like a pro. And this is the website, wavytunnelpro.com/6-month-elite-tools. So we do hope you try out our tools. You will also get Elite Tool Scanner training and live training sessions on the key Wavy Tunnel Pro trade plans with a dedicated Discord channel. You will get a one-on-one coaching session with me and monthly office hours to discuss setups and answer questions. Thank you very much. It was a pleasure teaching you today. Please email me at jody@fxtradersedge.com if you have any questions, and I hope to see you trying out our Elite Scanner tools. Thank you. Bye.